Hello and welcome to The Pitch. I'm Sarah Allen and today I'm joined by Anthony Golowenko from MLC Asset Management. We're going to talk about everything you need to know about separately managed accounts. Anthony, thank you for joining us today.
Thanks for having me.
In brief, what is a separately managed account and how do investors use them?
I think from a very basic concept of nothing new under the sun, or perhaps in Shakespeare terms, things that hath been or hath been done. So nothing new under the sun. An SMA is basically a collection of assets, whether they be direct securities or managed funds. It is ultimately a platform solution. So none of these building blocks are new. The way they're combined in a contemporary structure, the way they're combined that makes things really easy, efficient, flexible for advisors, well, that in the essence is what an SMA is. But it's typically a multi-asset solution, managed funds, direct shares, investments, on platform, and ultimately this platform technology enabling the solution to really benefit investors, benefit advisors in their time, and really see a leveraging of size and scale from the investment managers.
And what type of assets might you typically invest in when you're using an SMA?
Sure, well, the heritage, if we think and go back to a discrete share portfolio, it's probably more like 20 years ago these things started to exist. They morphed then into an individually managed account and then a separately managed account. But direct shares, managed funds, exchange traded funds, the really key determinant is being an on-platform solution, and typically that requires pricing to be on a daily basis. So on-platform assets, of which there's a vast range, coming to platform and filling this market space.
So globally, assets under management for SMAs surpassed 2.4 trillion in 2024, and I know your own strategies hit the 2 billion mark, which is no mean feat. What are the drivers behind the growing popularity of these investment vehicles?
Well, I'll kind of update that $2 billion number. It's actually 3 billion or just over now. So we've had some really good flows. And I think part of that is this is a solution of equitable, a democratised solution, whereby the program, and in our case, institutional investment manager insights, being parted on a multi-asset class solution to advisors and ultimately to their end clients. So the solution is flexible, it's very much transparent, and the communication channel or direct communication between investment manager to advisor to client, all of those things naturally resonate and form part of the aggregate SMA solution. So I think it's all of those things together, no new component individually or nothing new about that. The way they come together is a really flexible solution, and that's resonating very well in the marketplace.
So SMAs can be known for their tax efficiency. Can you take us through what that actually means?
Well, our legal team have been very clear about tax advice, and all of this is general in nature. Some of the things if I think about the MLC program and between what is our premium series and our value series, the design means quite effectively and efficiently investor may go from a growth investment to a balance, so naturally adjust or do so as they kind of go on their investment journey. Now, for an advisor, if we're getting to a more volatile environment or getting to somewhere with increased uncertainty, very naturally to transition or slide up or down the risk spectrum is enabled with this sort of structure. And it's enabled because there's beneficial ownership. It's enabled in a design of a program with common underlying building blocks, and with that beneficial ownership, a way to move really effectively. And things like direct shares, as I mentioned in Australia, which your Livewire viewers will be very familiar with, those direct shares can also be held, and the benefits of, as I said, beneficial ownership, providing efficiency as part of the solution.
Okay, so you started to talk about beneficial ownership then. Can you explain to investors what is beneficial ownership when it comes to equities?
Yeah, sure. In the same way, if you held BHP or if you held CBA or if you're over in Perth or here, Wesfarmers. So directly owning that in the entity's name for things like dividends and then associated franking credits. Now, all of those things accrue naturally within a fund. By owning them directly, it's just a little bit more transparency and a little bit more control on your individual outcomes. So, as I mentioned, an individual share in the same way that's held on platform or held as part of a portfolio, you can bring that into the SMA flexible, transparent structure.
And what are some of the key things that investors should be thinking about before they invest in an SMA?
I think, what are you ultimately trying to achieve? We have one of my colleagues talks about what problem are we trying to solve, and I think the diversity and resilience of someone like MLC, our program, by design, is harnessing more than or approaching 40 years of pedigree in this area, multi-manager, multi-asset investment solutions. And we can bring that same focus or institutional horsepower to that program. So, direct shares have a role. Direct shares can be complemented with a whole range of other investments. And I think it's ultimately comes down to a diversity and resilience in underlying components applied in a flexible, transparent structure. And if you're looking at those things and often partnering with a financial advisor, these can be part of a solution or certainly part of a discussion, and we'd welcome that.
And how can investors work with their financial advisors to incorporate SMAs as part of their portfolios? Are there particular type investors who are better suited to this type of investment product?
Yeah, well, interesting. So if I go back to the example of discrete share portfolios, 20 years ago and maybe 10 years ago, it was an individually managed account. The evolution of that into separately managed accounts just brings a new sort of way to do so. So in terms of the separately managed account with an advisor, what am I looking to solve? What journey do I want to be on? And we believe that through a whole range of asset classes, delving deeper in that next step of sub-asset classes, all of that can be achieved within an SMA structure and be done really, really efficiently. From an advisor standpoint and some of the conversations we have, what might have been your very sort of high net worth investors starting off in an individually managed account and something like a separately managed account for lower balance or high inflow clients as they grow, we're really seeing with an adoption, and part of that growth is I can utilise this solution for a wide range across that client base. And as much as we all love investing, as much as we're passionate about investment markets, for a financial advisor, we need to be humble enough to realise there's a whole broad spectrum of financial advice, whether that's regulations, taxation, estate planning. SMAs can empower the advisor to have those sorts of conversations and ultimately lead to improved client outcomes. And holistically, what we're doing or what we're trying to do is help everyday Australians secure their investment journey. So it brings pride to me as a professional to underwrite everyday Australians, ultimately their life story, their life's work. And that's what SMAs can bring.
Thank you for taking us through SMAs today.
Great, thanks for having me.
If you've enjoyed this interview, please subscribe to Livewire Markets for more great content. Thank you for watching.